A very warm welcome to you. This is Business Incorporated coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwago. On the program today, South Africa's headline consumer inflation slows more than expected to 5.1% year-on-year from 5.4% in May. Ethiopia plans to offer shares in its road building and maintenance projects to private sector investors. Plus, Zimbabwe's capital, Harare, plans to raise a $100 million bond this year to finance the building of new homes and end a decade-long housing shortage. We get started now with the markets, and the market in South Africa outperformed its peers at intraday, up 0.97% after data showed South Africa's headline consumer inflation slowed more than expected to 5.1% year-on-year in June from 5.4% in May. On month-on-month basis, inflation slowed to 0.2% in June from 0.3% in May. Core inflation, which excludes the prices of food, non-alcoholic beverages, petrol and energy, was at 4.8% year-on-year in June, unchanged from in May, while on a month-on-month basis, the rate rose to 0.4% in June from 0.1% in May. The market here in Nigeria was also in the green in anticipation of positive earning numbers. Egypt was the only laggard at intraday, down 0.14%, while Nairobi closed up 0.28% on Tuesday. And in the Middle East, the Dubai stock market rose on the back of strong bank earnings today. The Dubai index, which has been technically bullish since rising earlier this week above resistance on its April peak, climbed 0.1% at intraday. Saudi Arabia's index edged down 0.63% as Al Rajhi Bank, which went ex-dividend on Wednesday last week, slipped to 1.1%. Qatar's index rose 1.06% as Qatar National Bank, the largest bank, gained 2.9%, and Abu Dhabi was up 0.27%. And in Europe, investors are taking stock of a series of corporate announcements from across the continent. For details, let's bring in my colleague in Frankfurt, Annette Weisbach. Good afternoon, Annette. Thank you very much for joining us. Good to have you on the program. Hello, Annette. Good afternoon. Well, the corporate world is filled with headlines of earnings and operating activity, and one of this is from automaker Daimler looking to modify estimated 3 million diesel vehicles. Is this reminiscent of the infamous Volkswagen Dieselgate?
No, it's not. One cannot say that this is the same scenario, because what happens now, it's a preemptive action by Daimler. They are going public with calling back those vehicles, and it's on a voluntary basis. People can sort of bring their car to Daimler and they get that software upgrade. Analysts are saying that probably around 10 to 20% of so-called NOx, like this emission, will be reduced by that software upgrade. But as I said, it's a voluntary measure. Daimler is saying that will cost them roughly 220 million euros. That looks like a huge amount of money, but for Daimler it's not. They had an EBIT of 15 billion euro just last year. So that number is actually probably very well invested, according to analysts who are saying that it might improve client confidence in the product of Daimler.
Well, Annette, I kind of like the ding-dong movement I'm seeing there on the DAX behind you. Well, I don't know if it's a tale of two central banks this week, where the ECB and the Bank of Japan will be meeting. Now, what are market expectations from these two quite different monetary authorities?
Yeah, as you're pointing out, they are very different, and they are standing at very different times. While the Bank of Japan is widely expected to announce that they keep on adding to their monetary stimulus program, as they might actually scrap their very optimistic inflation target for 2018, the European Central Bank is standing somewhere else. We're expecting more or less the reiteration of their tightening stance, that they might give us some more idea about an earlier exit, perhaps even from their extra monetary policy stimulus. Remember in Sintra, just some weeks ago, Mario Draghi somewhat dropped the bomb, saying they're optimistic, they look through low inflation, which they currently do, and that the economy is doing so well that they need actually to tighten a little bit to keep the monetary policy stance accommodative. So it's extremely complicated what the European Central Bank is doing, but to use plain words, I think as soon as September we'll hear more about an exit to the asset purchase program, which could start as soon as January next year. Analysts are expecting that we'll hear from the ECB as soon as September that they might extend the asset purchase program well into next year, but with a reduced amount, which would actually be an exit.
Well, we'll just be in a waiting mode to hear what Draghi has to say after tomorrow's meeting. Now, what is the thinking at the Frankfurt market about the legislative squabbling in Washington about Obamacare repeal and replace?
Actually, I think people are disappointed. There was so much expectation, one could say, coming with the new administration, huge sums into infrastructure, a tax system overhaul, etc., pp. And that Obamacare, the repeal of the Obamacare didn't go through is just symptomatic about the fact that the new U.S. administration doesn't get anything done, and that's a bad message, because people were hoping for a sort of Trump bump, as they were calling it on the stock market, extra stimulus. And what we are getting now is more or less of one could argue that's more or less of a Trump dip, because the dollar is losing in value, which is of course not the greatest sign for the U.S. administration, and also B, there's no change when it comes to reforms, because he doesn't get anything through Congress. And that is negative also, of course, for investors worldwide, because still the U.S. economy is the world's biggest economy, and if there is a risk that there is a deceleration of economic growth there, which could well be the case given the confidence in the U.S. administration. That's also bad for countries like Germany, who are exporting a lot of products into the U.S.
Right, thank you very much, Annette, for your time. We'll continue to keep a tab on those market news as they come in. Enjoy the rest of the day.